How would you like to become your own lender, running your own bank for yourself and making yourself money versus trying to get a loan from some other bank, and doing it with two incredible tools such as an internal 401k and a whole life insurance policy? Let me show you. Hi, I'm Brennan, multifamily investor, but in the money game, it's also about how do you set yourself up for financial freedom. One of the great tools that I use that I wanted to share with you is how do you actually become your own bank? How do you set this up for yourself? And there's really two tools out there that you can use to do this. The first one is what's called an internal 401k, a solo 401k. If you're self-employed and you have an S corporation, or any corporation, but let's talk about an S corporation, you can have an internal 401k where you're your solo employer, and you're funding your own 401k internal to your S corporation. So that's option A. Option B is a whole life insurance policy. So life insurance policies, you have term and you have whole life. Term and whole life. Term is exactly what it sounds like. I want a term for 80 years. I'm going to pay a premium each month, and therefore I have a life benefit in case I pass of $1 million, $2 million. That's term. Whole life has a death benefit as well, but more importantly, it has an investment vehicle for cash value. So that's the benefit of whole life, is you get both, not just the term, okay? So let's break into how you become your own lender using these tools. So let's talk about self-employed and how the 401k mechanism works for you. So let's presume for a minute you are self-employed, that you have an S corporation. Now you're gonna set up a solo 401k, just a 401k internal to that S corporation. You're your only employee of that S corp. That's the cool news with it. With that, you can actually, as an employee, your distribution into it, $23,000 a year, capped right there. What's cool though is because you're also the employer, and if you're paying yourself a salary, which you should be, even if it's minimal inside your S corporation, you can take up to 25% of your salary as an employer, and that's a contribution. So let's say hypothetically you paid yourself $100,000 in salary. Well, you could take up to $25,000, right? 25%, and also contribute that into this 401k. So $48,000 a year. And that's all pre-tax, meaning it's reducing your taxable income on your corporation by doing that. It's like an expense to the corporation, and it reduces your personal taxables. So it's seen as an expense. So how does that work? So now think about it. Let's say for a minute I had $100,000 sitting in my 401k with my S corp. I can go ahead and lend myself up to 50% of that as a loan at market rates, and it's capped at $50,000 and has to be paid back typically within a 5-year term. But think about that for a minute. Let's say you needed $50K to go invest into a new business or start something new, or I don't know, you could be able to put it into a college, whatever it is, okay? And rather than you going out and getting a loan from that from someone else or a bank, you're your own bank. You pull the money out, you pay yourself back, you're earning interest on yourself, and then you're paying back the principal, and it's all earning money while this is happening. You're basically banking on yourself. This is how you do it using a 401k, S corporation, self-employed. Now let's look at the whole life policy. This is one that's even better. This is how the rich really do it. Think about it for a minute. I have both policies. I have a term and a whole life. The term usually has a higher death benefit. So let's say $1 million, $2 million. Okay, so that's the term policy. You typically will begin to convert that, because you can convert it, into whole life policy over time, right? From young to old. Now with that, the cool thing is you can loan money from that at no cap. There's not that $50,000 cap that you have on the 401k. You can loan up to 95% of your cash value. So let's say you had $100,000 in cash value in that whole life insurance policy. You could take $95,000 to yourself. You're paid at market rates, typically 4 to 8%. It's tax-free money. You can have any kind of repayment schedule. So with the 401k, it's typically a 5-year repayment schedule. With this, whatever you want. And the cool thing is you can set it up to where you earn, right? You earn money on the full cash value as though it were completely in place, that you didn't loan on it, that you didn't take money out of the cash value. You can earn as though it's fully in place and fully funded. That's the cool thing. So now you're earning money double, right? So you took a loan of say $95K, you're paying yourself interest, you're paying yourself the interest, plus the principal back on your own loan that you took on yourself, plus you're earning the dividend on the whole life insurance policy as though it were fully funded with the $100,000 sitting in there. So now you're banking on yourself. This is how you set these things up. Let's say I took out $75,000, 6.25% interest rate, repay back maybe $1,500 a month because it's whatever I want, and then I have a balloon payment down the road that I decide on. And that way it allows me, if I needed 75 grand just for whatever, I could pull that out, 95% of my cash value, and use it for whatever I want. Typically it's for little investment stuff. Now, if I need big loans, fine, I'll go to banks and other institutions. But if I need, $100,000, $75,000, $200,000, I can go pull from it, use it, repay it back, and just rinse and repeat. And now you are becoming your own bank using a 401k and a whole life insurance policy. So if you found this video helpful and you want another one similar to this about money, real estate investing, multifamily investing, anything like that, remember to subscribe, like, comment this video. It's really important so the algorithms will push it out and more people like you can see this and take advantage and learn and benefit from it. And if you want to learn about multifamily investing on how you can buy a 10 to 30 unit apartment building in the next 90 days with less than $20,000 out of pocket, check out my other videos I have in here about that and how you can execute at that level. Waste away and get rid of and wipe out your taxes, earn your wealth, financial freedom, all that stuff that we always talk about, and earn multifamily investment buildings around the United States. So it's a lot of info. I hope you enjoyed it. Take care. Happy investing.